I am Anand Parasrampuria, Associate Partner at Dhruva Advisors. I am delighted to welcome you to the fourth episode of our GST Day webcast series. You've known that GST has always been described as a technology first tax platform. It has been, it has evolved over a period of time into the largest real-time digital tax ecosystem. Today, the GST portal processes billions of API transactions related to either e-invoicing or e-way bill. And at the back end, the department has built up, artificial intelligence and advanced analytics into the to monitor the way the compliances and risk are assessed. What this means is that GST compliance is no longer a monthly or an annual exercise. It has become a continuous transaction level function. Every invoice issued, every waybill generated, and every return file contributes to a dynamic compliance profile that is continuously updated. Against this backdrop, the question for business is no longer whether technology matters, but whether the GST function, the in-house GST function, is equipped for this new reality, whether they are future ready. How can technology, AI, and big data be leveraged? How is tax administration transforming, uh, using this technology, AI, and big data? More importantly, what capabilities should business be building today to remain compliant, resilient, and prepared for the next phase of GST evolution? To help us navigate these important questions, I am joined today by distinguished panelist Mrs. Bhavna Maheshwari. She is head of tax with AllCargo Logistics. Mr. Tapas, he is a tax technology expert. A very warm welcome to all of you.
Thank you.
Let us get started. Bhavna, GST was designed as a technology first tax platform, reform. But the scale and the sophistication of that technology backbone today is on entirely a different scale. From an industry perspective, how has this transformation changed the way organizations or industry think about their GST function?
I think there is, like you've said, there is no doubt now what is the role of technology nowadays, be it any industry or be it a consulting. I think technology has moved since the day one when GST was introduced. It was very sure that technology would be playing a crucial role. And given in now we have just like this year, we have celebrated 9 years of GST. Given that, I could see a huge massive shift in the technology implementation from the government side also, and from the industry perspective, how they are constantly evolving with the technology. So I would coming from, again, as I've mentioned, from the logistics industries, where we have huge number of line items, huge number of transactions, and every and having registrations literally nationwide, having small having pin codes in small villages as well. We have like huge amount of transactions, so we are doing literally billions of API calls every month. There is invoicing. We are doing like almost 2 lakhs invoicing the line items every month. We are transacting. So it is very important that if I'll have a right blend of the technology, the use with the use of technology, I can always automate my routine transactions. And for large organizations like us, we have, if the ERP talk configurations, master data, GST validations, HSN classifications, even if the legal, from the legal point of view, I'm constantly telling my teams to implement it, but if the right input is not given in the system, everything fails. So the technology has started playing so much of important role, and automating it through AI and analytics, and through digital transformation and shared business services. This is no more a role of only the tax team. I think all the cross functions have to be very well technology driven, so that with all their inputs, and if with all their collaborations only, we can make a technology a very successful GST compliance in the organization.
Because from in your experience, from a system standpoint,
Right.
what is the single biggest technology gap you still see in an otherwise, large, well-resourced Indian, industry houses?
I think that's a wonderful question. And you see, considering whatever I have done in terms of GST automation or tech implementation, the biggest challenge that I see is most of the time it's not about tooling. There are a number of tools available out there in the market. The gap that I see is the master data quality, and underneath it, the fact that most organizations don't understand their own data. So the challenge is, I would put it in this way. Number one is their master data, your vendor GSTIN status, the HSN at master level, the place of supply logic hard coded for each and every plant. That is something when you receive a notice, you keep tracing it backwards, and then you realize that there was a problem at the time of booking itself. So, if the organization started structurally worked on their master data first and then worked on a technology solution, I think that's something that would really help. The second is data entry. Your masters may be correct, but many a times you don't have effective controls to ensure that nobody makes the data entry at their own whims. They understand how the system is. If there's somebody who doesn't understand how the system is, they make the data entry in their own way, which again leads to incorrect reporting. And the third one that I have seen, and considering the latest developments, I think with respect to IMS, etc., is where purchase accounts and taxation departments are not in sync. The purchase department might have agreed something with the vendors. They might have, entered into some agreement, signed upon certain documents that never reaches the tax department. And while finalizing the tax treatment, they do it on the basis of the information that they have. So. Large Indian enterprises, in my view, don't really have a technology problem. They have an ownership problem that looks like a technology problem, in my view.
So good point, Tapas, about invoice management system. This came to be operational, almost 1.5 years back. And then, initial there were discussion uh, on regarding whether it is mandatory or not. But with this introduction of invoice management system, the entire invoice and credit note life cycle has changed. You do accept, reject, and keep it pending before your tax filing happens. So, in your experience, again, how this has changed the way business manage their AR, AP, and vendor invoicing in practice.
Yeah. So when IMS came, I think it came in September, around September 2024 is when it was implemented. Initially, considering that it was a voluntary compliance requirement, which still it is, it was being taken a little lightly. And then the government started announcing that it is something that is going to be mandatory very soon. And then they, started also making announcement that your GSTR 3B is going to be something that's not that's going to be non-editable by you. Everything will flow. Your outward will flow from a GSTR1, and inward will flow from your IMS. That is when organizations started taking it seriously. And somewhere I observed that after introduction of IMS, the reconciliation and managing input tax credits silently moved from tax department's lab to the accounts payable department's lab, because that's something that they have to, the tax department said that uh, when my invoices are being accepted or not, whether I accept a particular invoice or I reject a credit note, whatever I do, it is the particular department that has to handle it. As a tax department, I'm only going to take the headache of the compliance. I'm not going to take a decision whether to accept a particular invoice or whether to reject a particular invoice or a credit note, so on and so forth. So that is a biggest challenge that I see, that changed a lot in terms of how the tax department works. Secondly, while IMS was introduced in September 2024, the Finance Act 2025 brought in a lot of amendments which are in line with bringing, making IMS mandatory. While they have still not announced that it is mandatory, the changes that they have made in Section 38, 34, subsection 2 allows the government to at least ensure that the process that they have implemented through IMS, like uh, uh, making GSTR to be available only once your previous return has been filed. Uh, the vendors can go back and regenerate their GSTR to be, which earlier meant to be an auto-generated statement. Now it has changed to be a manual statement. So that is something the government has already done the background implementation that's needed. It's only them now coming ahead and saying that this is going to be mandatory very soon. And the while there is an option where you can keep your invoice and even credit note for a single period of time pending. Ultimately, this results in the supplier, ensuring that whether his accounting happens properly or not, and it also something that helps him to understand whether if you reject a particular invoice, it helps him also know that the payment is also something that's not going to come through. He cannot just say that, oh, you have rejected the invoice, not my problem. I have just raised the invoice. Now, if you reject it, you don't take the credit. Secondly, if the credit note is something that gets rejected, which you rightly also pointed out, it gets added to the liability of the supplier. So due to IMS, the reconciliation that kept happening at the month end is something that has now become a real-time exercise. And I have seen organizations waking up at right on the 14th of the subsequent month and realizing that the customer has rejected their credit note and a large amount of tax liability has been added on into their GSTR 3B only when they file their GSTR 3B in the next month, because that's something that they have not been doing on a regular basis, on a not even, if not daily, then at least on a weekly basis is something that they are not doing. If they had done that, they would have realized that their customer has been rejecting their credit notes. So that is something that everybody will have to now take seriously, if at all they are still not doing it. IMS is the next step, or probably the last step towards making GSTR 3B non-editable return. The outward side is already taken care of. It's just that the government is waiting for this to get implemented properly.
Good point, Tapas. The other area is that have you seen inquiries about taking benefit of this IMS, because IMS has a line level information as against to 2A or 2B. The organizations looking at IMS with a view to purely automating that AR and AP functions, right from entry of the goods at the factory gate. You at the click of a button, whether organizations are thinking that I just key in certain details and the entire data is fetched from IMS portal.
Yeah, correct. In fact, the organizations who have been proactive, we have seen that these organizations have taken IMS as an opportunity to automate a lot of processes so that there's nothing they have to do on a manual basis. If you have received an invoice and you have received the goods, some of the goods are defective, then the various organizations have different processes. Somebody raises an immediate debit note into their system. Somebody communicates it to the vendor and says that you issue a credit note to me. Somebody just books the net of amount into their system, inform their purchase department, and then the tax department or the accounts department forgets about it. So varied processes are there, but organizations who have realized that this is something going to be mandatory, they've taken this as an opportunity to automate. And as you rightly said, uh, right from receipt of the goods at the gate is, or probably right at the time of raising a purchase order to at the end when the invoice gets recorded, the entire process has been rule driven and automated. And that's most of the organizations who understand the importance of IMS and returns becoming non-editable. Whoever has realized this has starting implementing this, and they've seen IMS as an opportunity to automate their entire inward as well as outward process, rather than going around and uh, waking up at the fag end of the return compliance where they realize that, oh, these are the actions that I should have taken at the start of my.
Thanks, Tapas. Bhavna, while Tapas did spoke about, the impact that IMS has created, is that basically your AR and AP functions, the call to accept or invoice has been, largely being shifting. How have you seen this within your organization? How are you managing situations of a credit note being rejected on your business side, on the AR side, when a vendor raises a credit note on your company? So, what all processes, technology, from an ERP standpoint, what all steps within your organization or generally in your experience industry would have taken?
Right. And so actually, truly speaking, in our organization, we have just implemented a new ERP couple of months back. So we are still in the process of implementing the IMS functionality completely. However, while we have already, like Tapas has shared, that we have also similarly now no more tax function is just responsible to validate any ITC. The responsibility has silently, we have also shifted the same to the accounts payable team. So the invoice to be accepted or not to be accepted is first taken care by the accounts payable team, and then only the GST team, the intertax team, takes actions on it. While the credit note still remains a challenge also to us, because um, on the outward side, when the credit note gets rejected, um, we were also facing a similar kind of an issue of GST liability getting in hand suddenly. So what we how we worked it out is that now we have started, first of all, at the contract level only, we have started inputting a clause stating that the customers will not reject it without a pre-discussion. Also, with our top customers, and we have started tracking the data. Who are the customers who are frequently rejecting these credit notes? So we have a pre-discussion with them. We share a pre credit note data with them. We both agree on it, and so that during 3B there is no surprises for either of us. So this is how, because just without having a pre-discussion, it was not helping, because even though we have agreed, sometimes the customers were by mistake rejecting the credit notes, and it was blocking our working capital. So this is how we have worked out. And on the vendors side, we have already we constantly keep on, monthly we inform that you have to, if you are giving us a credit note, kindly have a discussion with the payables team, so that while in taking any ITC, we there is no constraint.
So with so many, developments happening, Bhavna,
Yeah.
on the GST technology front, whether it is IMS or the
Hmm.
proposed 3B hard locking or, monthly notices, what do
Yeah.
you believe that, from a future perspective, how would a tax function being a future ready? Uh, how are leading, the industry organization redesigning their tax function to operate in this environment? And from a leadership perspective, how is, from a boardroom perspective or a CFO perspective, how should organization now think about investing in GST technology and governance?
Absolutely. I think you just asked me what I have gone through, like literally in past few months specifically. So we've undergone mergers as well as ERP implementations, and during all this while, I think we have even before the mergers also. One thing we have categorically realized is that the tax function is just no longer responsible for compliance. Now it is becoming more towards business, technology, and data governance function. So earlier, like the it was seen, the tax function was more seen as a function to timely file the returns. But however, today if we see, we are the business requires us to proactively mirror the department's reconciliation. We have to constantly reconcile GSTR 1, 3B, 2B, e-invoicing, e-way bills. Even if the one e-way bill fails, we face a cost directly uh, from the GST's mobile squads. They intercept the vehicles, then we have to pay the penalties. So I think tax function has completely transformed from just being a law driven function to a more of automation and data driven function now. And if so, I would just want to highlight from the industry perspective that how moving we are moving beyond the Excel spreadsheets, and we are now transacting billions of invoices through invoicing, IMS, and GST returns. Now, every we have so many APIs which we have incorporated because we want the booking person to be the gatekeeper of the law instead of the tax function being the gatekeepers. So we have the HSN validations, the while onboarding a customer or a vendor, we have incorporated a couple of APIs to validate the PAN, GST, IMs, so that no wrong invoice is coming. Is getting recognized at the time of e-invoicing. Then I would just from the implementing perspective, how what all points an organization can focus on. I think we should mandate that accounts payable should strictly lock the ITC approvals. Should The ITC approval should be strictly locked by the accounts payable team only while approving the vendor payments. Now, it should not be left for the GST teams only to validate it. We should be the second, the maker, we should be the second checker, but not the ones who should be actually uh, we should be actually validating it at the first go. Then introducing the real-time ERP validation to block the invoices with incorrect GSTINs, place of supply configurations. I think this is another thing which an organization, which we have personally been focusing on. Then the cross-functional GST control room, like the apart from the tax team, the procurement team has to be very they should be trained for the GST validation checks. Not just the tax, not just the procurement teams. I think the operations, the sales, the customer service teams, all of them have now need to be very updated with the technology and what all functionality we have. The tax teams, how we can collaborate that technology along with the cross functions, which will, because the if these are the ones who contribute to the master data, the CS teams contributes to the master data of the customers, like the procurement team contributes to the master data of relating to the vendors. So if the master data in the technology is not fed correctly, then I think the entire technology functions and even the investment fails. So I think it should be a cross functional now. And again, seeing that there are so many monthly reconciliations, I think we should now be audit ready. It should not be just like a monthly or a quarterly exercise. I think the reconciliation should be a continuous exercise, ensuring that the organizations are always prepared for the department scrutiny rather than just reacting after the notices are received. So I think the tax function is completely now more into technology, and that's why we have started calling it a tax technology functions. So yeah, and the second thing is how leadership sees, Anand. I think I have seen a massive difference between the how leadership has started seeing tax technology as. I think we have personally at a group level we have made huge investments in the AI because we have realized the value of how technology has helped us just no more a function which will help us to be compliant, but now it is becoming more of an agenda to the board and the CFO. And my CFO literally himself sits with us, and he sits to see every technology what has been introduced in GST, in the tax function, and how it is helping the organization to make give more meaningful outputs. So we have I think I'll just quickly share a small example what happened when we were implementing a new ERP. There were certain restrictions we tried to introduce in terms of GSTINs, the drop downs, and the management was like, this is involving a lot of cost and we shouldn't be, this will need another patch of huge investment. So we that time there was a huge disagreement between us, but then later on in 2 months they realized the value of not mandating those GST and restrictions. And the when we saw the wrong invoices getting generated and then reversing it, the cost of reversing it was went much more beyond the cost what we were proposing to invest in restricting that. So after that, I think they've started seeing any investment in GST as a huge. I think the ROI is now they don't consider the investment from only from the ROI perspective. I think they have started understanding it's more to be mandated, because it will the results it's going to give in future will be much more higher than what the cost of investment would be right now. Also, one thing what we have seen is like the introduction of AI with the logistics industries, which have huge amount of AIs, which has a huge amount of invoices every month. I think that has really helped us massively in reconciling. So I the input the blockage of input tax credit and the blockage of working capital has reduced to a greater extent. So I think both my CA and CFO, I think they have approved a huge amount for the technology, because now they have very well understood that if you think the compliance is expensive, then try non-compliance. So they have gone through it, and now they have understood that non-compliance will be much more expensive, and better to have a compliant have better to have a technology driven, even if it's costing more.
Bhavna, with so many changes and GST becoming more of a data-driven
Yeah.
rather than a law-driven, how do you see the role of, the GST advisors and professionals, as it is essentially a compliance-driven rather than just an interpretation of the law? So, how do you see when you are engaging with in your discussions from a GST advisor perspective, what role do you expect them now to play?
I could see a clear difference to the responses we were expecting like 10 years ago from the professionals, and now as on date the responses we are expecting. So 10 years like behind, if you see, that was completely law led. We would want the replies to have more of judgments to and more of law interpretations. But today when we see, it is more data led. I think I we want we wish that the professionals have more of the ERP knowledge. Then we want them to understand the systems, what went wrong with the data. It is more of factual based nowadays, as compared to what the earlier notices were. So traditionally, the advisors were measured by the ability to interpret the law, but today I think we expect them to we expect to help us to prevent the disputes and not just to resolve them at the time of notices. And also the ERP, we expect them to understand the ERP data flows, tax engines, the business processes, so that whenever there is any dispute, more they can blend the legal interpretation with the design, rather than just writing, reproducing or reiterating the law in the litigation perspective. Also, when we face any challenge, say we were having a huge massive implementation of some cross charge activity, so I think that time the first thing we have sat with the professionals was to understand the entire system, because without understanding the system, I think the legal interpretation completely fails. So if to be strongly data backed narrate and to be uh, to be more supported by the documentary evidences, I think that helps us, that helps the professionals as well to give more better advice. And from the industry perspective, I also believe that if the technology and AI analytics, I think it will significantly improve the productivity of the professionals with the and in the professional judgment they would want to apply overall in any strategy in any strategizing or any kind of replies to notices or any litigation, also any advisory also they are giving.
Thanks, Bhavna. Tapas, in your experience, you know, largely CAs have been averse to, or GST professionals traditionally have been averse to use of technology, right? But are you seeing a change now with so many data requirements, department itself using embrace of technology? How has been your experience with the professionals? Are they building up in-house technology platforms? Are they partnering with service providers, the technology service providers? And which model is working better?
Yeah, perfect. And I think this is the best timing to discuss this point because till now, the way things have gone is advisory firms generally partnering with companies who are more focused or are able to deliver technology. But that's slowly and gradually changing with the generative AI taking the front seat, where you, being a domain expert, can describe whatever idea you have and it spins out a good amount of first cut or a demo tool that you might want to use for any problem statement that you have. So I see this as a change, and I think the shift mirrors what has been what the audit profession has went through with the data analytics also roughly 2 decades ago. The reading an ERP configuration also became a skill that one would have apart from reading the statute as GST professionals, and I think you'd be able to relate more to it. If I am as a professional, I get a case where I have to help the client draft a response to a notice or even an appeal, and it relates to an entire compliance that the client has handled. There's no option for me to dig deep into the data, and for that, I think the uh, being technologically literate, understanding various tools and bringing out the nuances from the data is something I believe has become an inevitable skill that one should possess. So, while along way building those skills, if being the domain experts, if the advisory firms are able to build that capabilities, and I really see a lot of advisory firms building that skill. I think nothing like that because being domain experts, and I think this was told to me by one person who is good at building AI solutions. When I had built something, he mentioned to me that this is one thing that I would always lack is not having the domain expertise. I can do a lot of research, I can build a lot of tools faster than you and build beautiful solutions, but the domain expertise is something that I lack. So, coming straight to the answer back to what you were asking, I see advisory firms definitely building their own team and working on technological solutions. But then again, the challenge also that I see in that is when it comes to scale or when it comes to handling large assignments where the client also doesn't have that technological support at their end. That is something being a partner with an expert in technology is something that's inevitable. Otherwise, I mean, I see the change happening where firms are increasingly trying to build their own solutions out, and it's really it has been easy the past 6 months like it has never been before.
Just only relate, Tapas, what you said, because of late we also have started embracing on technology. Idea is to, how can we reduce the time and effort that has gone into in the day-to-day work that we have that our team does, right? Whether it is compliances or advisory. But another related aspect, I mean, is that how do you see AI actually adding a value to the professionals? What are all the areas that AI can be used, given that AI is at a very nascent stage? And
Mhm.
do you foresee a human judgment still continue to remain indispensable part? Because AI works on prompts.
So perfect, and I think this is something that everybody has been figuring out, and we are seeing that the waves up and down where uh, last year everybody had a mandate to implement some technology or some AI, and even if you had to implement some rule-based solution, people, the businesses were saying that we have a mandate to implement AI. So yeah, that was the trend last year, and now of late, or probably in the towards the second part of 2026, we have started seeing companies pushing back only because the costs that AI bring in, and there are inherent challenges of AI which we don't have an answer to as of now, and I'll come to that in a bit. So, put it in a nutshell to start, AI is very good at the parts where the work is at a very high volume, and there's something that would need uh, an intelligent system to work on. But parts, there are also certain parts that carry a risk, and from a distance, you might feel that this is something that can be achieved through artificial intelligence. But when you actually start implementing those systems, you realize the problems that they are. To put it into perspective, I have seen somebody developing a solution where, right uh, from right at the moment of receiving an invoice, you just straight away the AI classifies the invoice as the relevant bucket in which it would fall into the return. That's something which is a good use case, works fine. But along that, there are other implications also. I met a businessman recently who's trying to, scale his business to the next level. Somebody told him that Claude is good at everything, and everything that he wanted to do was, using Claude. Even if it was a rule-based automation that was needed. So the problem that generative AI brings in is that it's so good and it's so popular. Even if there is something that can be achieved through a rule-based automation, people want to bring in AI, right? So I, if I had a rule-based task to be automated, I would definitely use AI. But to build a one-time solution, that solution would do it on a repetitive basis for me, rather than using AI for doing that same assignment. Because executing that assignment may not need that intelligence. It's only the building of that assignment once is something that's needed. So that is where I would caution one, while AI does add a value, but you have to very much be focused on what is the process, and try to ask a simple question to you, whether this is rule based, whether this can be automated through a rule based solution, and that can be through any software. Either you can configure your own ERP, you can have a Python based utility, you can run SQL, or you can have a simple Power Query automation into your Microsoft Excel to do some sort of automation. So there are so many tools that are available in the market. My rule would be, there would be two categories of to stay out of AI. Anything, as I said, that is rule based should be out. And the second is where there is something which is confidential, that is something that should never be outsourced to AI. So while everybody would want, as soon as a notice comes, the response to the notice should be prepared by AI. But if you're working on if you are, let's say, you are in an industry, you are a part of a large listed entity, you try to upload your notice to the AI before you intimate the stock exchange that you have received this notice. There is a clear problem here in terms of data privacy and a whole lot of issues that come up to it. Of course, there are solutions where you can have your local LLMs built into your systems, but again, that's not something that's very easy to do. It's very easy to upload the notice to all the popular LLMs out there and get a response to it, but that comes with its own privacy challenge. And again, while generative AI has its own benefits and it is being used so much, of late we are seeing a trend where people are using it specifically, and I would say specifically for advisory or litigation. If if somebody feels that I can just straight away go to AI and get my answers, hallucination is something that keeps coming up in the limelight every now and then. There have been judgments, written judgments or published judgments of Gujarat High Court, Maharashtra High Court, where they have pointed out that the submissions, either at the lower level which has been challenged, or before the Honorable High Court, has been drafted using AI, and the citations, etc., that have been cited are absolutely fake, or that's something that's not available. So AI is a good thing, very great to implement a lot of solutions. It has immense number of good use cases, but as we used to say in school, I believe we used to say that a fire is a good servant, but a bad master. Same thing applies with AI as well. If you keep the human in the loop and ensure that all the outputs that are there, you are able to review it. The system that you are using is something that if you had to explain how the output came out, you are able to do it. Then that's a good use case for to implement AI. If not, then as I said, the privacy, something that can be done using a rule-based system, and something where a human is actually needed. That is somewhere I would push back on using AI, or at least have those checks where human in the loop is involved, so that you verify everything that is being done through AI.
Completely agree, Tapas, with I mean, data confidentiality is something that everyone has to be wary of, whether it is the advisors or the industry that uses AI as a functional tool. But having said this, people are, or the industry is any which way is reporting transaction level information on the GSTN portal, right? So how do you see from a tax administration standpoint, that how is tax administration deploying this artificial intelligence and advanced analytics to monitor the compliances? What is happening behind the scenes? I mean, it would be worthwhile if you could throw some light on this aspect for the audiences to know how are systems changing, or data from CBIC to income tax to RBI and all those things.
Yeah, no, it's a very valid point, Anand. In fact, there have been various initiatives from the CBIC side, from the CBIC, as well as the ministry. I think there's one program that they've initiated. They call it Advanced Analytics in Indirect Taxes. And the short form is ADVAIT, which is CBIC's own engine built by its own Director General of Systems and Data Management. It pulls all your GSTR1, 3B, GSTR2B, invoice data, e-way bill, the customs data through IceGate. They get it reconciled through income tax through the CBDT and CBIC arrangement. And even it seems that they might also have an access to the data that they have filed with MCA. So the government does have a 360-degree view of whatever business transactions you are reporting at multiple places. Then there is something called BIFA, Business Intelligence and Fraud Analytics, which has been implemented by DGGI. Again, the same side of the coin, where it is particularly pointed at fake invoicing, circular trading, and the shell chains. Uh, the DGRAM handles the risk management across the customs and GST, but this is something that they've been using a lot. In fact, one of the cases that we handled is the officer was very clear and asked the client point blank that I don't see a technology where you can, purchase grains and then make steel out of it. So I can see your suppliers purchase data, who has purchased only agricultural produce and he has somehow sold steel to you. How is that possible? So that's kind of an analytics that they do at the back end. And this is not something which is a speculation. This has been something that the government has put onto on record in the parliament very recently by the minister. And the scale of finding, of course, the cases take time to settle down, but the amount of ITC detection that they have been that have been reported for the financial year 25-26 are upward of around 70,000 crores across 30,000 cases, using all these analytics that the government is doing. And of course, as I said, the more detection is not a proof of more fraud, but it is at least a proof that the government is implementing a lot of tools and analytics to match all the types of data points that you have. And one thing that would also want to point the other side of the coin is that due to this automated data analytics, we have also seen people getting notices of 1 rupee, or even one case we saw the notice was of a couple of paise. So the department, while is implementing a lot of technology solution, sometimes if the officer also, just as I mentioned in the previous point, there is no human in the loop. That's something that the analytics also give a garbage in, garbage out result. So if somebody has not put a particular threshold into the notices that are being issued, that is something that really creates an issue at the assessor's end, as well as to, for that even a single rupee, you cannot just keep the notice open onto your system. You have to give a response. Probably the entire issuance of the finding out of that difference and issuance of notice may have been taken care of in an automated manner at the department's end. But when it comes to the assessee, they, in terms of large corporates, they have to follow whatever the process is, and one cannot just brush aside a single rupee difference. So, department, as I said, they have multiple programs. They've been using advanced data analytics, and it seems that they are also trying to build in their own intelligence engine to find out all those data patterns using AI and ML. I think the outputs of it and the outcomes of these initiatives is something that we would start seeing very soon and in increasing cases about it.
Bhavna, with this so much integration happening, across the functions within the department, whether it is direct tax, indirect tax, or an RBI perspective, okay, how do you see from a business perspective, is the responsibility internally to govern, have a strong governance system, and how it is being viewed, how are businesses coping up with so much of integration, uh, you know, within the government authorities, for data.
At least the data governance may have five major pillars, like what is the data quality, the data ownership, data integrity, data security, and data traceability. If you are able to answer all of these in a positive sense, I think then you have a good data governance in your organization. So coming to the first, the data quality. If you are not maintaining correct GSTINs, you're not having correct place of supply, everything fails there at the entry point only, and that itself shows the governance is very very poor. Then accountability, the accountability, I think it's no more restricted to within the organization or just the cross functions. The accountability is also very crucial from while you're uploading the data of customers and vendors on any kind of technology tools. So with increasingly with GST data increasingly and the cross verification you are increased, and you are uploading the data into the digital platforms these days. So any data which is uploaded, say on a GST portals also, is no more of just restricting to that particular function. It you are this data gets cross verified with customs, it gets cross verified with income tax, MC, and other government databases also. So I think every transactions which is created on the digital platform is creating a digital footprint, and it has to remain consistent in all these multiple regulatory ecosystems, else you will be very soon tracked down and full of litigations. Coming to, I think we have a very important already we are listening, hearing so much about DPDP, right? The digital personal data protection framework, which adds another important dimension nowadays to the governance. So while GST completely focuses on the correctness of the tax data, the DPDP requires the organizations to ensure that the data, whatever embedded with these invoices or so many details of the customers and vendors, both is fully protective and is processed lawfully, securely, and only for the legitimate purposes. So I think the governance, should enable the business. It should not restrict it. However, I think it is very important that the accountability uh, of that data should always remain with the organization, and it cannot be outsourced. So if you cannot always our whatever is data is owned by you, that cannot be protected by anybody else. It is your own responsibility first to protect your own data. So I think strong governance is very very important. And although organizations may outsource the data processing, but they should never and they cannot ever outsource the accountability. and the fiduciary accountability shall always remain with the business. Also, I think the considering the strong governance, one more important point is that it should have a very strong audit trail. The data should be having like the customer masters, the vendor masters, GST registrations, HSN classifications, uh, in everything. Wherever you are, you should have if you are questioned sometime, if you have a notice or a litigation sometime, you should be able to get the robust audit trails. If you're not supported by a very strong documentation, then it is very difficult to, then it itself is reflecting that you do not have a very strong governance in your organization. So yes, I feel that DPDP framework is also helping us to have a strong governance, and it's a, even if the organizations are engaging with so many EASPs, GSPs, clouds, AI platforms, I think they should constantly focus on protecting the data, because so many every AI, I think it's clearly displaying that the data protection is, although you sign a lot of NDAs and everything, but still the data protection and the governance remains with the organization, and you should not completely rely on them, and you should always have masked data. If you should always mask your data while you're uploading it on the any AI, for any kind of reconciliations or any kind of replies, because I think we find shortcuts, right, to upload any kind of data on the AI and to get the faster results, but the faster results might lead to a very risky and exposing situation. So yes, governance should not just also the governance should not just remain the responsibility of the tax functions. I think it requires again a cross functional governance framework, and I think each and every team, may be the tax team or the finance team or the IT team or the legal team, all the teams, business teams should be they should make a habit of periodic compliance health checks, and they should form SOPs to have a good governance system in place. And I think we are at least following. We have completely the IT is very proactive, and all the business teams are very proactive in the at least having a strong governance.
Thank you, Bhavna. Tapas, I mean, with so many pieces moving, you on the technology front, GST and making so many changes almost every year. One thing that comes to mind is what next? Can you share some insights which is not yet in public domain, this is your experience, that what is maybe 3 months down the line, what is the next change that is anticipated, maybe 6 months down the line, or maybe a year down the line, whether from a GST compliance perspective, e-invoicing perspective, I mean, how things are going to change from here on.
I think one thing is certain. Of course, there is no single go live to prepare for as of now. The direction in which it is traveling is fixed. The reporting windows are getting shorter. The warnings it is being planned that these warnings that you see in your data are going to be your blocks, and the data sets are getting there. What I mean by this is, for example, T30, initially when the invoicing came in, even if you forgot to generate an IRN, you could have reported it later. That then there was a time limit that was introduced, which was applicable for 100 crore turnover. Then that was brought down to 10 crore turnover, which is virtually all B2B transactions are covered. So there's a 30-day cap. If you don't generate an IRN, you miss that deadline, and practically that invoice becomes invalid in terms of the GST law, and it goes lower and lower. As soon as the e-invoicing limit is further reduced, I believe this is also something that gets further reduced. Then there are two warnings that the government has been issuing since the time that they introduced IMS. One is they mentioned that the first that they mentioned is that your GST 3B is going to be totally hard law. Then they took back the advisory and they said that first we are going to make your outward side hard locked, and then we'll make the inward side hard locked. Again, that was still relaxed. They started with one section of the GSTR 3B outward side they would want to make hard law. But ultimately, the pattern very clearly suggests, and the plan is the question is not about if, the question is only about when this is going to happen. So, and again, I see also as only a stepping stone, and I don't see it as an end. The GSTR 3B lock-in. They say that your e-invoicing is something that is going to auto-populate your GSTR 1. Your GSTR 1 and your, if you make any mistakes, you get a window of GSTR 1A. That is something that's going to auto-populate your GSTR 3B. That's on the outward side. And then on the inward side, your IMS, whatever you accept or whatever is deemed accepted, and moving out the pending and the rejected, then whatever gets populated into your GSTR 3B on the inward side, specifically that specific clause 4A5 is something that becomes your inward credit. Of course, the self-reported credits like reverse charge mechanism, import of services, that still remains open, but that's only the small window that remains open. So I think the way the government is moving ahead is through blocking the GSTR 3B based on the line item wise filing that you are doing. And that has been the biggest challenge with the government. The GST law, when it was introduced, it was supposed to be, the filing was supposed to be a transactional level, but owing the teething issues at the time of introduction, they relaxed a lot of reporting requirement. You could have filed your GSTR 3B first, and later on you could file your GSTR 1. That is something that has now been plugged in. You report uh, 1,000 rupees in your GSTR 1, but file a GSTR 3B showing a liability of 900, immediately you will get a notice on an automated basis. You don't even have to, the officer doesn't even have to open his system. Same thing, I believe, is going to happen. They are not going to send you the notices. They are not going to show you any warnings. Your return itself is going to be frozen. Only thing that you can do is on a subsequent month. And as we discussed in the previous points with respect to the analytics initiatives that the government has, I believe it shouldn't be a surprise if later on down the line, I don't know when, but this is my gut feeling as to the government might also say that. Uh, Wait, I have all your data from your GST. This seems to be your income tax return that I've prepared from your GST return. Do you want to accept this and then go ahead with the filing, or you want to make certain changes? So while GSTR 3B may only be an initial point, and of course, this is all going to take time. The way the technology is getting developed and the way the government wants to ensure that they have the control of all the data, and they do have to a lot of extent. I believe this is something that's inevitable eventually. So my remark or my closing remark for this particular question would be: the government has all the data and they have mapped everything for you. Do you have a mapping of the data that you report to different places?
So, just a very quick question, Tapas. How do you rate India's or compare India's approach in GST and what has been done compared to the other countries in the world? If you could just summarize that in a minute or so.
Yeah, sure. So, see, India, in terms of e-invoicing, we see the e-invoicing buzz has been not recently, in the past 1.5, 2 years, the Gulf implementing it, the entire Europe implementing it. India has done it right back in 2020. But the model that India has is a clearance model where if it's not an IRN, it's not a valid invoice. You report the invoice to the government, and then you submit a PDF, you submit a written invoice, you submit a printed invoice, sign it, scan it. You do whatever. The government is not really bothered about it. They only want that the invoice should have been reported to the government. And the reporting happens after the invoice, passes through the entire validation that happens. As compared to it, the e-invoicing that is being implemented in various countries, there are different methods. One is there's no clearance model. There's only a reporting model where you send your you follow the entire process that has been defined. The invoice goes to your customer, as well as simultaneously it gets reported to the government. In some cases, it's a clearance model only when, just like India, when the acknowledgement is generated from the government and the invoice then goes through the channel and goes to the recipient. And in some cases, there's no reporting on a real-time basis to the government. You just follow the entire e-invoice mechanism. But what stands out as compared to India is that not only you have to, generate an e-invoice or generate that acknowledgement number, your entire invoice data has to pass through the entire funnel that has been created, the pipeline that has been created, the recipient also has to receive the invoice in an e-invoice format, which is a prescribed one, either an XML or a specific format that is being followed. That's something that's not there in India, but and most of the countries are following technology or a method called PEPAL, which is a framework which has been globally accepted. It was initially introduced in Europe for in order to ensure proper government reporting, but that is the model that is being accepted is being implemented in most of the countries, of course, with slight variations for each and every countries, and that is where it stands out. In India, the receiving of e-invoicing is something that's not mandatory. The only thing that the recipient has to do is to ensure that the invoice carries an IRN. Whereas in all the most of the other countries that are implementing, the receipt also has to be ensured that it goes through the proper channel. You have vendors sitting at the supplier side as well as the recipient side who validate the invoices and then pass it on to the recipient. And then the recipient has to consume that XML or that specific format and get the data recorded into their system.
That brings us to the end of today's discussion. Over the last hour, we have moved from understanding the scale of technology already present in the GST administration, how technology tools and AI are reshaping the entire GST function and the tax administration part, to what businesses needs to do internally to stay ahead of, on the compliance as well as from the government technology perspective. The common message across all three panelists is clear that future of GST compliance is not just about knowing the law, but it's about to strengthen your data, master data, your systems, and your governance. My sincere thanks to both Tapas and Bhavna for sharing their insights and valuable time for this session. Finally, thank you to all our viewers and listeners for watching this episode of Dhruva GST Day Webcast series. Thank you.